If you're looking to buy an investment property, here are a variety of loan options available to you. I'm Eric Eisenberg, president of Expert Home Loans, and I'm a 25-year mortgage veteran that was recently ranked one of the top 50 mortgage brokers in the USA. There are a variety of loan options available for investment property loans, such as full income documentation, bank statement loans, asset depletion loans, debt service coverage ratio loans, and even no doc loans. It's important to have a great understanding of these different loan options and speak to loan experts before making a decision on what suits you best for your investment property purchase. The first loan option for an investment property is a conventional mortgage. Here's where we're going to use full income documentation in order to get you qualified. This could be your tax returns, W-2s, pay stubs, and bank statements. So what we're going to do is we're going to take an independent appraiser's determination of market rental value for that property. And we're going to use 75% of that value in order to add to your income to get you qualified to buy the home. An example would be if that investment property is going to give you $4,000 a month in rental income, we're going to take $3,000, which is 75% of that amount, and add that to your income. Then we're going to add that to the income that you obtain from your job and make sure that your total monthly obligations are not more than 50% of your new income calculated. Sometimes these conventional loans offer better rates or terms for an investment property, but they're not always the best option. Number two is bank statement loans. This is utilized for self-employed borrowers who write off a good portion of their income on their tax returns. Now, one of the biggest benefits to being self-employed is you're able to write off a significant portion of your income for business expenses. But if you're self-employed and a good portion of your income is written off, you might not qualify for a conventional loan. In this case, we're able to offer you a bank statement loan in order to get you qualified for a new investment property purchase. What we're going to do is collect 12 months of your business bank statements, calculate all the deposits over that 12-month period, and take away an expense factor. So if you deposit $500,000 a year, we could take an expense factor from 20 to 50% of that amount. Then we're gonna add 75% of the potential rental income from the investment property and use that income to qualify you for your new home loan. Just like with a conventional mortgage, based on that income calculation, we wanna make sure that your new expenses, including that investment property, are not more than 50% of your total income. The third loan option is a DSCR loan, which stands for Debt Service Coverage Ratio. This has become one of the most popular types of loans for investment properties over the past few years. The unique thing about DSCR loans is we're not looking at your personal income in order to get you qualified. When determining whether you qualify for a DSCR loan, we're going to look at the potential rental income either from a short-term rental or a long-term rental for that specific property as determined by a third party, such as an appraiser. Then we want to make sure that 75% of that potential rental income can cover your mortgage payment. If that is the case, that's all the income documentation we need in order to successfully close a DSCR loan. One of the biggest drawbacks on DSCR loans is they often come with prepayment penalties. The standard prepayment penalty for a DSCR loan is 3 years, but you could offer to take a higher rate or pay higher closing costs to get a 2, a 1, or no prepayment penalty at all. Lastly, if you're a borrower with a significant amount of assets but have no income to show and the property would just not pen out for a DSCR loan, we do have no income documentation loans in order to buy investment properties. These require significantly larger down payment, have higher closing costs, have higher interest rates, but we could get you into the property. Whether you're looking to buy your first investment property or build a real estate portfolio with Airbnbs and multifamily units, it's always great to consider all of your loan options. If you're looking to buy an investment property, you need to do the research and decide which loan type would suit you best for your needs, because they all have positives and negatives associated with them. If you need more advice, you can always feel free to reach out at eric@experthomeloans.com.